Hey guys, Bob Iacino, co-portfolio manager of the Stock Think Tank, along with Mike Arnold, of course, here with your weekly update. It is January 4th. It is the first trading day of 2021. I am talking to you before the markets close, and as I look at a market, a Dow specifically, that has been down as much as 640 some odd points, it's recovered a decent amount, but we're still down. Now, before I go into the portfolio and what I think is going on, did you see this? And then my next question would be, did you read it? If you read it, you would see that I'm calling for a bad January. Nothing that happened today changes my mind. But you'd also know that it wasn't necessarily correct about what I thought the drivers would be. I did mention politics because that's what all the analysts and pundits are saying is driving today's sell-off, is that it's politics. And I said politics would be a question because we didn't know how the new administration would play out in terms of economics and market, whether it would favor the markets or be anti-markets. So I did mention that, but I didn't think it would happen on January 4th. I don't even know if this is actually it. I had somebody earlier this morning say to me, when we reach new highs, which we did off the open today, we hit new highs in the indices, new all-time highs. Said, you still believe it's going to be a wicked January? And then we were down 600 points. I actually texted him and kind of joking around saying, how do you feel about my prediction now? But I want to be clear that today doesn't mean that my prediction is right. We won't know if my prediction is right until we get in toward the end of January or until we get a fairly good correction during January. So I just wanted to point that out as today isn't what I was predicting, and don't give me any credit for it. And it isn't necessarily not what I was predicting either. As a matter of fact, the sell-off today might give the central bank and other sort of market, let's call them market pushers. I don't want to say manipulators because that's not really what they are. It's not an accurate term and it's a negative term, but those who watch the market as a sort of signal as to whether they're doing their jobs right or not would not like to see this today. So it actually becomes less likely that all of January ends up down when you get such an early negative swing. And again, we are coming back a little bit right now. So we've gotten back about half of the losses that we had intraday. But if the political winds move in the direction that the pundits are saying caused this sell-off, it's likely to be a more of an extended sell-off. So we came into the end of the year, and I mentioned this last week, exiting positions, not because we wanted to wind the year down, not because we wanted to get out of things before the holiday. I mean, we got a Santa Claus rally, right? And if you look at the data, January that follows the Santa Claus rally, going back to about 20 years, there were 16 Santa Claus rallies in the last 20 years. And in 10 of those Januaries, the market was up in January following a Santa Claus rally. So the numbers are actually against what I said. Also, 12 of those years, we had a positive year following a Santa Claus rally. Now, they're not causal, okay, they're just correlated, but it's still something that kind of goes against my prediction. So a lot of this can be wrong, speculative. But from a perspective of what we did in the portfolio, none of what I think is going on in January matters. We only have 3 core portfolio stocks on, not because we were winding down, not because we were trading off my prediction, but because we reached our targets and we converted that money to cash. And I'm going to always talk about that because now we have more cash to go into stocks that we might want to go in at a higher level if you're using our position sizing spreadsheet, and you should be. We now have more cash to go into those investments to get into fresh, high probability trades, which we're looking at a couple. You might actually get a couple along with this alert. I'm not sure because we haven't closed yet, so it depends on how we close. But looking at what the portfolio is doing, AbbVie, which a lot of you newsletter subscribers didn't get, the Stock Think Tank members did, that one has gotten profitable for us again. It was negative today earlier, and we're back up a few cents on it, about 25, 30 cents on it as I speak to you right now. The Lowe's trade, still profitable, and our stop is at our entry price, so it's theoretically a break-even trade. If the market were to fall out of bed, we'd likely lose a little bit on that Lowe's trade because we probably wouldn't open up right at that stop level, but it would be a minor loss. And Foot Locker, we're down on that one by, how much are we down right now? Foot Locker would be 37, 47 cents. And on that particular trade, I'm not worried because, again, it's a pretty long fall before we get to our stop. But even if we go full loss on those, last year, the alerts, had you followed our position sizing and all of our alerts to the letter, would have returned you 62.79% with Reg T margin, which is just your typical margin. The SPY straight up was up 26.2%. Those are the final numbers for our alerts last year. So 62.79 in our core portfolio versus a 26.2 move higher in the SPY. That's what we're trying to achieve. Those are the final numbers for last year. We're in a good position right now with the sell-off to start looking for things that are maybe oversold, probably not there yet, and start to reload our portfolio and get some of these moves on the way back up if it goes back up. Watch how January works out. I'll talk about it at the end of the month as to whether my prediction was right or not. And if you didn't read the newsletter, maybe you want to read it now. I will talk to you guys soon. Again, if you want to become full members, we'd love to have you. Full members also get the special plays. And right now, special play, we have silver that we've been in since October 13th. And as I look at silver right now, it's up 3.8%. We're getting close to our target on that silver trade as well. Cheers, everybody. I'll speak to you guys next week.